Investors are checking out the earnings from CIBC, Royal Bank and TD. CIBC and TD hitting record highs. We did see some selling in Royal Bank at the open. Mike Clare is the man to go to for analysis of the bank results. He's Senior VP and Senior Portfolio Manager at Brompton Funds. Mike, thank you very much for joining us. Talk to us about TD, if you would. What jumped out for you with these earnings?
Sure. TD, TD, we saw pretty strong results from TD along with the rest of the banks. I think like all six banks essentially beat bottom line earnings estimates this quarter. So a pretty strong quarter from TD. I think what stood out to us in particular, first of all, results from the capital markets unit have been very strong, over 20% ahead of consensus estimates and growing at 65% year over year. So they've done obviously a very good job integrating the Cowen acquisition from a few years ago. They've been generating strong trading and fee income in that business. Along with that, I think TD, what stands out as well is they've sort of gotten back to their bread and butter of the Canadian personal and commercial banking business, with that business reaccelerating to some extent and doing a good job there. And then, of course, they've been undergoing a restructuring both in the U.S. and broadly across expenses. That restructuring program on their expense side is now complete. So they've taken almost $900 million in upfront charges, including $200 million in the first quarter, the current quarter. And that's going to generate eventually annual cost savings of $775 million, of which we'll see $500 million this year. So lots of good things happening at TD.
Can we talk about Royal Bank? We did see a little weakness in the stock at the open, but let's check it out as we move deeper into the session. Is there something that might have given investors misgivings here?
Yeah, I think so. First of all, for Royal Bank, which we still think is the number one bank in Canada fundamentally, does trade at a premium valuation. So the bar is very high for them.
Okay.
They did have a very strong quarter, but I think if we could pick on one area of weakness is that their credit losses still remain somewhat elevated. So they've reported impaired credit losses at the high end of their guidance range for this year. Some of that coming from the capital market side, which tends to be lumpier, but then looking at different trends, leading indicators of future credit losses, I think some of those trends are a little bit softer than their peers. So looking at things like new impaired loans, we saw after several quarters of declining new impaired loans, we did see an uptick in the current quarter. And one of the things driving that uptick is residential mortgages, particularly in Ontario, where the Ontario economy, of course, has seen the impact of tariffs on auto workers and other manufacturing sector workers. So something that I think the market is one quarter doesn't make a trend. The market's going to look at that and see the beginnings of potentially some future credit losses. But the other thing to consider on the residential mortgage side is that having a loan go impaired doesn't necessarily mean you take a loss. This is a very, very strong credit portfolio with very low loan to value ratios on the portfolio. So it's not doesn't necessarily translate into losses, but it's something to watch to see if that trend continues in the coming quarters.
And how about CIBC? That stock hitting a record high today.
Yeah, CIBC, we think probably had the best quarter among the group here. Now that all six big banks have reported, their bottom line EPS growing at 25% year over year, 16% ahead of consensus estimates. And we really saw strong results across all of their business units, driven by a number of factors, including margin expansion. So net interest margins continue to grow from prior quarters. Capital markets business was well ahead of consensus, growing over 40% year over year. We saw pretty strong results from their U.S. commercial banking and wealth management segment on both volume growth and margin expansion. And notably, as well for CIBC, I think we've seen pretty strong performance in their strategy of targeting, the mass affluent customer here in Canada, which tends to be a higher profitable customer, lower credit losses, better returns. And we continue to see them grow their number of clients there with 6% year over year client growth in that business, 12% growth in client balances in that business. And so that's really, it's a strategy that the team's been working on for a number of years that continues, of course, with the new CEO in place now. And they're really doing a great job across the board.
Mike, thank you very much indeed. Mike,
Thank you.
Mike Clare, Senior VP and Senior Portfolio Manager at Brompton Funds.